Hello traders, welcome to binaryoptions.net.au, and today we're going to teach you how to trade with the Fibonacci retracement levels. First of all, what are fibs? Fibonacci retracement levels are ratios that are used to identify potential reversal zones. These ratios are derived from the Fibonacci sequence. So by using Fibonacci retracement levels combined with historic levels of support and resistance, we can forecast zones of reversals in the market. Now remember that we are using historic levels of support and resistance because we need some kind of confirmation that an actual level is there in the market, because if there is not a level that a lot of traders are watching, the Fibonacci retracement levels might not hold. Now, the Fibonacci levels must be used in a trending market. Why? Because the idea behind this is that we are waiting for the correction to end or to reverse for us to trade with the trend or with the direction of the main move. And after a steep move, price will almost always retrace a certain amount before continuing. Remember that the price action is not linear. Price actually moves in waves, and when price is moving up, we have waves moving up, but then after that wave exhausts, we have correction waves that move um, to the opposite side before continuing and making either higher highs in an uptrend or lower highs and lower lows in a downtrend. And when we apply them, we are trying to forecast the exact area where price might stop its correction to jump in with the main trend. Now this is how a chart with the fib levels looks like. You can see that we are in a clear uptrend, right? And when we got to this point, we got a massive red candle that took out this high right here. So we might be in a correction, okay? And then because we have a lower low, we can pick this swing high as our high to draw the Fibonacci retracement level. So we grab the low and we draw it all the way to the high. So if price comes all the way back to this low, it will have retraced 100% of the entire move up. Okay, but we are looking for the 50, the 61, and sometimes the 76.4 area for an entry or for a signal to buy calls in an uptrend and puts in a downtrend. And in this case, price came all the way down here, and as you can see, stopped at the 61.8, which confluences with this low and this area of support, which is previous support too. And when we have this massive candle to the upside, we have confirmation that this in fact was the reversal area and a good signal to buy calls at the 61.8. Now let's go to the actual bounces and breakouts of these areas. The trading with Fibonacci is a simple trend following system. The strongest levels are the 50 and the 61.8, as we saw on the previous slide. And to be completely transparent and on how we trade it, it's as simple as this. In an uptrend, you draw the Fibonacci levels from low to high, and you buy calls after the end of the retracement at its reversal. But you need confirmation, and you need to use candlestick patterns and uh, previous levels of support and resistance, or what we like to call historic levels. And in a downtrend, you draw from high to low and buy puts after the correction. It's the same thing. You wait for the correction to end, and when you get confirmation that the level held and we have a reversal, you buy puts. So this is an example on how to use the Fibonacci levels on an uptrend. You can see that we have a low here, and then we continue a move up. We were making higher highs, we were making higher lows, higher highs, higher lows, and higher highs. When price came all the way down here and tested this low, as support again, we still were in an uptrend, okay? But when this candle broke with these lows or this area of support, we can consider that we are actually in a correction because we are also making lower highs. So we can pick this high as the high to draw our Fibonacci levels. And we draw from low to high. And we also have this black line right here, which is a historic level of support. Okay, you can see that it has been tested here, but it also has been tested previously. So when price breaks above this area of previous support and comes back to retest it, we can see that it confluences with the 50 Fibonacci level. So we have a double confirmation that this is an area of support that is strong enough to hold for a reversal. And when we break with this high, we have a signal to buy calls, and because the 50 Fibonacci level and this previous area of support held, and we have a high probability setup on a trend following trade. So we buy calls, and let's say that we are looking at the 1 hour chart. We can buy calls for an end of day expiration option, and as you can see, this ends up in the money. Sometimes traders will say that that using Fibonacci levels is a self-fulfilling prophecy, but I don't like to believe in magic when trading. And I did my back test, and let me tell you guys, I use them a lot in my trading because I mean, there's so many traders that are looking at the same retracements that in confluence with historic support and resistance, they are strong enough to give us strong reversals such as this one. Now this is an example of a downtrend. You can see that we have a high here and a very strong move to the downside. When we break these lows, we can pick this. I mean, when we break these highs, we can pick this low as the low of the entire move. And because we are in a downtrend, we draw from high to low, and then we have our Fibonacci levels. You can see that we have a previous level of support right here, right? And it's a historic level, so we draw it with a black line. And you can see that price came all the way up here and tested it to the pip. When we draw the Fibonacci levels of this leg down, you can see that this level of previous support confluences with the 50 Fibonacci retracement level. Now this is big because it's a strong area, it's a strong Fibonacci level. There will be a lot of big players watching this level to get in on with the down move. And you can see that this candle went all the way up here but closed below the level of support, giving us a clear rejection. So we can enter right here for a continuation. And if this is the daily chart, you can choose to trade a weekly put option here that would have expired in the money. So as you can see, these Fibonacci levels work when you use them and when you draw them correctly, and they work in every time frame uh, that you choose to actually analyze price action on. I mean, if you are analyzing the 5-minute chart because you like to trade the 15-minute options or the hourly options, it's fine with me, and it will work. But the lower you go in time frame, the harder it will be for you to find a correct level, because when you go down on time frames, there will be so much more noise. That's why we recommend that you trade from the 15-minute up to the daily. Okay, now let's go to the chart, and we will pick some weekly uh, charts, and of course we are going to look at some hourly, 15-minute, even the 1-minute charts. Okay, we're back, and as you can see, we have the Aussie weekly chart, the US dollar Swiss franc chart, the daily chart, I'm sorry, the US dollar yen chart, the hourly time frame. We have cable on the 4-hour chart. We have the Aussie CAD on the 5-minute chart and the euro yen on the 1-minute chart, and this is a trade I just took. So let's start with this one. We're not even going to go and full screen on this one because it's so easy to see that we are in a clear uptrend. We are making higher highs, and higher lows. And when we break with this low right here, we can pick this high. And there you go. You can see that we draw from low to high, and we have this area of previous support that is being tested right here. And when we broke with this high, I took the trade. This is the 1 hour, and I chose to trade uh, a 30-minute option, call option, which is still on the go but heavily in the money right now. And this is the 1-minute chart. Okay, you have to. What you need to do is you actually have to choose the right setups for you. I mean, you have to be very picky when choosing which setup you want to trade and which setup you don't want to trade. You have to be clear that you need confluence and you need confirmation of a reversal, just like this. I took the trade right here when we got this candle, okay? And I mean, I knew that there will be some possibility that we will chop before going up because we have this strong level of previous resistance and previous support that was being tested right now. But the fact that we came this strong and stopped at the 61.8, and then we got a very strong bull candle tells me that this level was being watched by a lot of buyers, and the actual buying power that was at this level held the bear pressure that made price drop all the way down here. And as you can see, we are making new highs as we speak. So this is one trade that I am happy with. And this is the Aussie dollar Canadian dollar chart. And let's pick this high with this low right here. Let's make it a little bigger because we actually want to see previous levels. Let's go all the way. Now, we are in a clear downtrend, okay? But the thing about this is that we chopped for a while before going down. And we actually made higher highs here. So, and because I am trading the 5-minute chart, I'm going to choose to use only this leg to try and get an entry for a 50-minute, maybe a 30-minute expiration put right here. Now, let's go back to a smaller size to draw our Fibonacci levels. And as you can see, we have here this area of resistance, okay, that was then tested once, tested twice, it's been tested 3 times. And we are going to draw our Fibonacci levels right now. So, I mean, I I personally don't like the setup too much for a continuation because one, we are not at a clear area of well, yes, we are a clear area of resistance, but we are not clearly testing it. Okay, we haven't gone above it and come back below it, and we are not in confluence with any Fibonacci levels at all. So for me, this is one that I would pass on. It is not as clear as the 1-minute chart that we have right here, right? So this is a pass for me. Maybe if we go all the way up here to this previous area of support, and if we go back, you can see it right here. This is a strong area of support, and if we I'm going to wait until price moves all the way up here to buy calls at the 61.8 previous area of support, which is for me a much better opportunity to get in on the main trend. Remember that sometimes you will uh, loose moves, and if it goes lower, well, it goes lower. But for me, this is not a real setup. A real setup will be all the way up here. Sometimes you get filled, sometimes you don't get filled. That is the life of the day trader. Now let's go to the 4-hour chart of the GBP USD, and as you can see, we are in a range, so we can't use Fibonacci levels on this time frame. But maybe if we go lower, we can actually start trading this leg up, because if you notice here, we have a strong 4-hour candle, we have a top and a correction, and right now we made an looks like an inverted pin bar on the 4 hours. So if we go on a lower time frame, maybe we can appreciate the entire move. So let's go to the 1 hour and see if we can actually catch this bad boy right here. And well, the move up is not as clear as I would like it to be. And even if we go to the 50-minute chart, I really think that there's no way that we can use Fibonacci on the GBP USD. And this is the weekly Aussie. Uh, we are going to try and see if we are at a level that can give us a nice swing trade to the downside. And not only because we are in an actual downtrend, but because of the policies of lowering the value of the Australian dollar by the central bank. So as you can see, we came all the way to the 76.4. This is a very deep correction, and I like it a lot. But this is the weekly chart, okay? And if we would like to swing trade this bad boy, I think the entry would have been on the last candle. But since we are just on Monday, I think it would be a nice, super long-term trade, okay? This is the kind of trades that you will hold for at least a couple of months, because we are looking at the weekly chart. And uh, I mean, you can also see that if we use another Fibonacci level from the high of this downtrend to the low of this downtrend, we already came to the 50 level and retrace all of this, okay? And now, and we made a lower low, and now we retrace all the way back to the 76.4 of this leg, which is the green Fibonacci level. We and we started to move down again, making this a lower high. This gives me a lot of confidence in a very long-term swing trade for another leg down, for to test at least these lows right here, or this heavy area of support right here, which will be 400 pips away from where we are now. And in a long trade term position, you have a better payout with binary options. So basically, this is how you do how you do it, how you trade with the Fibonacci levels and historic support and resistance levels, and of course candlestick and chart pattern confirmation.